Good morning, bonjour à tous et à toutes. Good morning, everyone. It's great to be here in Parliament as we now sit for 3 weeks. My name is Francesco Sorbara. I'm the Member of Parliament for Vaughan, Woodbridge. I'm joined today with the Mortgage Professionals of Canada. Just very quickly on my part, I'd like to welcome the Mortgage Professionals of Canada and all their members to the Hill. It's great to see everyone. It's great to be back here in person, of course. During my first session of being a member of Parliament, I headed the Liberal Housing Affordability Caucus, and during that time, got to know very well a number of stakeholders in the Canadian housing market, and one of them being one of the most important, the Mortgage Professionals of Canada. The mortgage professionals generate approximately 40% of all mortgages in Canada, approximately 60% of all mortgages for first-time home buyers. Their insight, their expertise into the Canadian housing market is something that is invaluable to members of Parliament, but invaluable to consumers, to everyday Canadians. We know purchasing a house is not just about purchasing a house. It's about purchasing a home and creating memories for a family for generations. And we know that the expertise offered by the Mortgage Professionals of Canada is something that we need to listen to and heed. With that, I do welcome, again, the NPC folks here. I've read through their brief. There's a number of interesting ideas, that I know many people are listening to and reading to. And we know housing affordability domestically is one of the top issues for all Canadians. And I thank the mortgage professionals for their insight, their ability to offer advice, and their their work in being here today and bringing their members from across Canada to meet with members of Parliament. So without further ado, I'd like to introduce Paul Taylor, the President and CEO of the Mortgage Professionals Canada. Paul.
Good morning. Thank you all very much indeed for your attention today. As Francesco has already said, my name is Paul Taylor. I'm President and CEO of Mortgage Professionals Canada, and I'm joined today by my fellow executive members of the Board of Directors. Mr. Joe Pinero is Chair of our Board, Veronica Love is the Vice Chair of our Board, and Eric Chamalot is the Treasurer of the Board of Directors. Before I get into the points, actually, I do want to thank Francesco very much indeed. Mortgage Professionals Canada is quite specifically a non-partisan organization. We enjoy working with several MPs in particular, but Francesco has been incredibly assistive to us, helping us understand some of the sort of government processes, as well as opening doors to get many of the discussions begun for us with important policymakers and such, regardless of their political stripes. So thank you very much indeed for that, Francesco. We certainly appreciate your assistance there. Today marks the start of Mortgage Professionals Canada's Advocacy Days in Ottawa, which is a series of meetings between members of Parliament and MPC member volunteers from across Canada. On behalf of our team here, and on the behalf of the volunteers and the 15,000 members that we represent, we would like to thank the over 70 members of Parliament and senators that we will meet with this week, both in person and virtually. With them, we're discussing housing and housing policy, and the current issues facing Canada's home buyers, and especially first-time home buyers. MPC has, for some time now, been asking for several sensible changes to the mortgage macroprudential rules, primarily with the goal of increasing access to home ownership for Canada's younger and aspiring middle class. We are very encouraged that certain promises made by all parties during the last federal election reflected our recent policy advocacy. But our discussions this week will primarily focus on three asks. First, to implement the campaign pledge to increase the insured mortgage cutoff from 1 million to 1.25 million and index this to inflation to better reflect today's home prices. Second, to provide qualified first-time home buyers access to mortgage amortization periods of up to 30 years for insured mortgages. And lastly, to harmonize and make consistent mortgage qualification stress tests for both insured and uninsured mortgages by setting the mortgage stress test level to 200 basis points or 2 percentage points above the contract rate. I'll now invite my colleagues to briefly discuss these recommendations.
Thank you, Mr. Taylor, and good morning to everybody. glasses. To our first point, increasing the mortgage insurance cap to $1.25 million and including it on an ongoing basis was sensible enough to be an election promise made by both the current government and the opposition last year. It is necessary, and here is why. Mortgage insurance is not currently available on homes purchased greater than $1 million. Therefore, a minimum of 20% down payment or at least $200,000 in savings is required. The median aggregate home price nationally in Canada at year-end 2021 was $779,000. However, in the Greater Vancouver area, the median price was 61% greater at $2.53 million, and in the Greater Toronto area, the median price was well over $1.1 million. As most Canadians know, valuations have only increased since. The average townhouse in the very urban centers in Canada are well over $1 million today. For a young, growing family, especially ones trying to do it themselves, to amass $200,000 or $250,000 to qualify for the space they need is a huge task. Increasing the mortgage insurance limit would make market price housing once again available to these families. Also, as an important bonus benefit, and perhaps not widely understood, increasing the mortgage cap would expand the type of housing stock eligible for mortgage insurers, which would diversify the portfolios of mortgage insurers and then decrease the overall risk to Canadian taxpayers. Thank you.
To our second point, with home prices continuing to increase due to demand in most areas of the country, assistance must be provided to those individuals and families who cannot turn to the so-called bank of mom and dad. Current stress tests and more stringent mortgage qualification criteria means a smaller and smaller portion of a couple's or individual's income is permitted to be considered available to service that mortgage debt. It's a fact that Canada has some of the most tightest and stringent mortgage qualification criteria. And reintroducing an insurable 30-year amortization is a means to achieve greater fairness to a group of aspiring home buyers who have added that they want this and they deserve it. The government's well-intended current first-time home buyers incentive program, whereby first-time home buyers can obtain an equity mortgage from the government, is simply failing. Why? These are the top 3 reasons our members share. Number 1, it adds to the legal costs on closing. Number 2, its qualifying criteria is so restrictive that if one can qualify to buy a home with a first-time home buyer incentive, you can also qualify one without it. And generally, you can borrow more. And thirdly, almost all clients dislike the idea of becoming a co-homeowner with the government if they can avoid it. Most recent data shows that the first-time homebuyer incentive program participation is less than 1/3 of the government's stated initial goal, which was 30%. An insurable 30-year amortization can accomplish at least the same outcome as the first-time homebuyer program promotes, reduce more monthly payments for buyers, but without the complexity of 2 mortgages and increased legal costs to buy and sell the home. Lender systems are already set up to handle 30-year loans because they already account for a significant portion of the new uninsured loans issued. Indeed, there is a strong argument that making 30-year amortizations to insured mortgages could finally help level the playing field for the first-time homebuyers. Thank you.
Bonjour. En troisième lieu, nous souhaitons exprimer notre désir que le gouvernement et les décideurs permettent le fonctionnement prévu du test de résistance actuel qui qualifie les prêts à un taux majoré de 2 % par rapport au taux réellement négocié par les emprunteurs. Étant donné que les taux d'intérêt devraient commencer à grimper et que les taux hypothécaires ont déjà augmenté considérablement par rapport à leur crue historique de l'an dernier, nous ne voudrions pas que le taux de qualification passe au-dessus des 5,25 % d'intérêt présentement en vigueur. Nous voulons plutôt que les décideurs considèrent que le test à un taux majoré de 2 % est déjà en place pour s'assurer que les emprunteurs sont prêts pour les augmentations futures de taux d'intérêt. En toute franchise, nous craignons que le test entraîne une suppression considérable du secteur immobilier avec la majoration actuelle de 2 %. L'augmentation du taux de qualification au-delà de 5,25 exacerberait probablement ce problème. Sur ce, on this, we thank you for your time and welcome any questions.
We have no questions in the room, and we have no questions on Zoom, so thank you.